Hallo und herzlich willkommen. Hier lernst du alles rund um das Thema Investor Relations, Fundraising und Kapitalmarkt. Mein Name ist Julia Stötzel und ich bin Gründerin und CEO von Investor Relations Beratung Unicorn. Unicorn ist auf einer Mission, Investor Relations für die nächste Generation einzuführen. Das bedeutet ganz konkret die Integration von digitalen Medien wie zum Beispiel LinkedIn, Podcast, Newsletter in die klassische Kapitalmarktarbeit. Mehr Informationen zu Unicorn, aber auch zum Podcast findest du unter unicornconsulting.com. Und jetzt wünsche ich euch viel Spaß beim Zuhören.
Hello and welcome to the next episode of Street Tweets. And today we have Jörg and Milos here with us. Thank you so much for joining us. How about we kickstart? We'll take it one at a time. So we can start with Jörg. How about you tell us a bit about yourself, your background, and you're quite specialized on the markets. So maybe you can also give us a background on what's happening on the markets.
Yeah, sure. Thanks for having me or having us here, and congrats for setting up Street Tweets, which is great. And I think it started actually at Deutsche, right? At Palais Populaire. So great to be full cycle back here. So Jörg Lange, I have the pleasure heading corporate venture capital from a central perspective at Deutsche. So I have a huge passion for growing, venturing, investing into startups. I have done so in the last 10 years mainly in the US. Moved over to Berlin jointly with my wife and 3 kids in August, and here I am.
Okay, so a recent move.
Yes.
Well, thank you for being again here with us. And exactly as you pinpointed it all started with Deutsche, and we had an amazing first event, I must say. It was a very good time there.
I heard so.
You have to join for the next one. And
I take this one as an exception.
Perfect. Well, I mean, why don't you tell both me and the audience a bit more about corporate venture capital, which is your field at Deutsche, and how is it different from traditional venture capital, which most people would probably know more of?
Yeah, sure. So I think first of all, there are a lot of similarities between corporate venture capital and venture capital. So it's like siblings, almost like twins, if you want to say so. So we obviously provide capital, and have minority shareholdings, term sheets are similar, it's the same. So there are a lot of similarities, but maybe 2-3 things which are maybe a little bit unique about corporate venture capital. The first one is the goal of investing is very often not purely financial, but you have a financial and a strategic goal. So you will see this one very often, that there's a huge interest in the product, and in terms of often the company uses the product or distributes the product. So that kind of mindset you will see as well in the engagement. So there's a very long-term thinking around what is the product, how can we strengthen the product, and what I'm seeing pretty often is it's a pretty strong signal as well to other clients. Since when you see that a big organization is using that product, it's usually pretty strong signal in terms of into client acquisition for the startup. Second one is balance sheet. So what you will see is very often is that CVCs are using their own balance sheet. That has pro and cons to it. One pro, which is often mentioned, is that there's not that 7-year or a term where we need an exit. So it's a bit more open, which probably connects as well with that strategic angle at the beginning. Often CVCs are more going to Series A, so there needs to be a product. So the very, very early one is usually not a focus of CVC. We've set up an entrepreneur residence program, but the core part is usually the Series A-ish round. And it's not only glory on the CVC side. So sometimes it takes as well a little bit longer from a process. That's probably something where you need to be aware of. I think CVC has improved a lot, but sometimes just the investment process takes a bit longer than traditional VC.
Okay, and I mean, how would you explain it? Would you say that it's rather like you're investing in the Series A startups for Deutsche Bank, or are you connecting other companies that are interested in doing in CVC?
So it's usually for the mothership. So when we invest for strategic benefits of Deutsche Bank. So when we would like to use a product, that is an example, and it can be a tech product, it can be an HR product, it can be a cybersecurity product, it can be anything, right? With 90,000 employees around the world, we need a lot of products and a lot of innovative solutions. But that is a focus, yeah, Caroline.
Okay, that's super interesting. And how's it going for you in the segment these days? Like, of course, like market has not exactly been all roses, one can say. We've had a bit of a downturn, but I mean, everyone we've been interviewing in the last couple of weeks is going on about how they're optimistic. So how do you see it on your side? Like, what has happened, and what do you see is going to be happening in the next couple of months?
Yeah, sure. So, yeah, as you rightfully said, we are swimming in the same ocean and we are breathing the same air, right? So it's all the same. But I think where CVC is maybe a little bit special. So we have seen as well the typical 2021 peak. But what we're seeing right now is it plateaus pretty well in particular on the CVC side. The share actually depends a little bit on who you ask, but the share increased from the overall investment. And I think that part is due to the fact that startups are looking for that kind of, in the new paradigm in terms of not only grow, but as well profitability is important, outreach to more clients is important. That kind of additional investor base of a corporate, which brings revenue, since when Deutsche Bank uses the product, we directly bring revenues, but as well as that signal, which I mentioned before, that stamp to other clients and for your client sales funnel is something which actually the current environment is very favorable for CVC. So it's I'm very optimistic as well.
I'm happy to hear that. I hope you too. And would you say, no, absolutely. I can totally see how getting this positive stamp is useful. Like, I mean, we all hear how getting investors on board these days is longer, it's more tedious. So once you have CVC backing you, it's like, it's a mark of recognition as well. And what's your recommendation for startups that are looking to potentially get in contact with you or with a CVC in general? Like how to contact, how to pitch, and what is generally the process to get you on board, would you say?
Yeah, sure. So I think the first step is always do your homework to reach out to the right investors. So if you have an automotive startup, I might be not the right investor for you. So I would BM, iVentures or Volkswagen, amazing CVC units, and there are many others in the automotive industry, but they might be a better partner. But the same was true for the venture part, right? But I think in particular on the CVC part, see what kind of strategic benefit and signaling you would like to send in terms of selecting the right partner. And I not only mean fintechs for Deutsche, but we're currently looking at a cybersecurity, or we're looking at cybersecurity companies. If we work with a cybersecurity company, it's a great signal, right? In terms of regulated, trusted investment and corporate and retail bank using a certain cybersecurity company. So that's number one. From a process perspective, they're usually with CVC two processes. One is the investment process, very similar to the traditional VC part. I would say add maybe 2-3 weeks of due diligence, but probably I would have said this one a year ago. I would have said, you need to add a month or 2 months, but actually I think we're coming now together again in that moment in terms of VCs are now doing due diligence as well again, very diligently. So, which is good. I think it's a good sign. I think it was maybe not too healthy in the aftermath what we have seen in 2020, 2021. On the other hand, there's always a partnership track as well. So there's a team working with a startup on how do we work together, vendor agreement, sales distribution agreement. Those things can run in parallel. They can run independent from each other. Sometimes investment is first, and then afterwards there's a partner agreement. Sometimes there's already a partner agreement, and then we invest. But that kind of strategic angle is very often there from a partnership side.
Okay, very, very.
And then just ping me. So the reach out is super easy. LinkedIn and just we are
You're always open for conversation.
Open for deal flow and good conversations and chocolate.
Perfect. I'm sure they're going to be happy to hear that. Hope your inbound gets even bigger and bigger now. And what about, I mean, you mentioned how like on the strategic side right now you're looking at cybersecurity and of course like fintech, but maybe could you explain us a bit more what's your strategy at Deutsche Bank? Like what are the kind of startups you would like to have knocking at your door?
Yeah, sure. So first of all, our sweet spot is Series A.
Yeah.
So that is a sweet spot. We have set up an entrepreneur residence program, so where we work with, literally you can have an idea and you can work with us for 6 months in terms of testing it out and developing the idea further. But the sweet spot of investment is Series A. We do it globally, so we have a global investment approach. There are a couple of markets which we like to double down on. Germany is one of them. So your audience here is perfect for us. That's why we are here. We on the enterprise side we have 9 investment themes. So which not surprisingly AI is a huge theme for us, and happy to talk about this one more. But ESG as well is a huge theme. Future of work, cybersecurity, RegTech, digital assets, productivity, and I think I missed one, emerging tech, which is around quantum computing, metaverse. So those are our themes on the enterprise side, and then on the fintech side, which is driven by the different business areas. You have topics like embedded finance, pre-post trade on the investment bank, investments, alternative investments. So it's actually pretty broad focus. So I hope there are a couple of startups here in the room which are now pinging on LinkedIn saying it fits.
It fits. I'm the one.
I'm the one. Yeah.
Yeah, but that sounds super interesting. I mean, maybe not today, but another point would be super interesting to know, like how you actually further develop these strategic partnerships. But I mean, for now, why don't you tell us a bit about the benefits that these companies that should be knocking at your door will get out of this kind of strategic venture that they would get into with you to that extent?
Yeah, sure. And I think that goes with the overall market trend, which we're seeing, I would say now for 5-10 years with an increase in the US and several players as well here in Germany and Europe. So capital alone is not the game. So if you are just providing capital, that's not good enough, even in the current environment, in particular for the good startups. So what we do, but many other or several other CVCs are doing the same and a similar approach. We have a business development person who helps the startup internally. So it's very often land and expand. You go into one area of Deutsche Bank or one business area or one region, and then expanding it to other areas from a product perspective. And the business development person can be the liaison officer for you to find the jungle in the big organization, but helps you as well externally. So the signaling which we discussed earlier, right, in terms of other clients for your business. So we give as well client introductions. We open our network. Obviously, we have 25 portfolio companies in our door, but we have as well a pretty wide outreach into the different ecosystems. So that's number one. Number two is we're very often helping crossing the pond. So it goes US to Germany, Europe, but as well the other way around. Since on both sides we have a very very, very strong and established network. Future funding rounds, that's something where we are pretty proud in terms of helping our startups. So new investors, who could be the right investors. We have a lot of connections. Our corporate and our investment bank, obviously, they have a lot of connections there. So we are utilizing all those connections in terms of making sure that the next funding round is there. And then last but not least, I would probably say the product development is something which we are obviously very interested in, since we're using the product, or we like to use the product, or we're selling the product. So what you will see often is that as well, there might be a board observer or board member from an SMB joining in, which is usually a good mix actually when you have the different investors on the board, and then as well someone who truly understands the topic and the market from our side. So that's usually very well received in terms of how to develop the product further, how to penetrate the market, what we do the right strategic moves. So those are a couple of examples where we help the startup.
That sounds like a great package, to be honest. If I was in a startup, I would be saying, yes, I'm in.
I convinced you. Very good.
No, I mean, I think I can totally see how there is a good reasoning for it. And you're right, like what you said at the start, like financing is clearly not enough. And this seems like I mean, I'm sure for many companies, it makes a lot of sense to go down this path and do like go through the strategic growth. But maybe.
And it's usually as well a kind of combination of both. It's what I see very often is that it's not, you don't purely take a CVC on.
Yeah.
It's usually in combination.
With
so I think 90% of the deals we're doing are with VCs. So you have a lead VC and you add a CVC. That's usually how you actually get the best of many worlds.
Yeah, I can imagine. It's a good time also to transition on the more corporate banking side. Or I mean, from CVC to corporate banking with Milos, who's also here on the line with us today. Maybe would you like to introduce yourself, tell the audience a bit about yourself and what you're doing at Deutsche Bank as well?
Thanks, Caroline. First, really appreciate being on the podcast. So thanks a lot for setting it up. A little bit about myself. I was born in Europe, grew up in Canada, studied and worked in the United States, which is where I first started with Deutsche Bank. So been here with the bank for 14 years now, and that's where I had my first opportunity to move to Berlin. So this was 7 years ago. It was on an expat contract only for 3 years as kind of an experience, and where I was managing the venture funded tech company relationship management team. And ever since then, I fell in love with it. So 3 years turned to 7 years. And today I'm sitting in Frankfurt and very lucky to have the opportunity to continue the work with tech companies across DACH. So this is startups, venture funded companies, and companies that have IPO'd and continue on with their overall operations. So our team is providing financial services to tech companies. So from Jörg's side, he's Deutsche Bank as an investor, and on my side, we are Deutsche Bank as a financial services provider. So we have, the bank, and most banks have multiple divisions which are working with these types of companies. You have like private banking and wealth management, which is focused on the individuals. You have investment banking, which also looks at Series B companies and is helping them out with equity, so raising equity, debt, and mergers and acquisitions. So we are very, very closely linked to this team. And my team is on the corporate banking side, as mentioned, treasury management solutions, and to the ones that might not be super familiar with it, that usually includes cash management, trade finance, lending, foreign exchange, and liquidity management, and a few other topics. But these are the core aspects that we provide to startups and tech cos.
Sounds comprehensive, I would say. And so like I suppose you're working with companies actively hunting for capital. How do you see this market shaping up in Germany since you've been here?
Well, you've all been talking about roses, so and breathing the same air. So yeah, the market when I first arrived to Berlin 7 years ago was explosive, and it was a super exciting time. There was a lot of growth and a lot of focus on companies expanding to international markets and really taking on the world. That has slightly changed, as you have all, I'm sure, read about, but it hasn't fully stopped actually. We see that companies are tightening growth and focusing on profitability. What does that really mean, right? So companies are looking to either leverage scalability as their revenues grow, to increase the profit margins, and then also on the other side is managing direct and indirect costs. And indirect costs are usually linked to some type of risk management solutions and so on. Here we're really seeing kind of, let's say, two main buckets where companies that we're in constant dialogue with, and especially in the last 6 months. On bucket one would be interest rate optimization and foreign exchange management. And on the other side, especially since the Silicon Valley Bank implosion, on counterparty risk management. I think counterparty risk management has been really top of mind for most companies. I remember, Jorg, we were also in it really in depth when we were talking to investors and trying to find ways of providing solutions to many of the companies that were impacted. This kind of had a knee-jerk reaction, like an initial reaction. Okay, how do you manage counterparty risk? On the one side, if you look at it from a banking perspective, you can open up multiple bank accounts. So you establish multiple relationships, you spread your liquidity to those relationships, and thereby reducing the risk in any given counterparty. Now, anybody that's done that or tried to go to that experience will probably have felt some operational hurdles in handling that. It's expensive from a direct cost perspective, but also indirectly, right? They need people who will manage these processes, people that will manage the banking relationships, and that also takes up a lot of time and resources, which they can dedicate to other projects, internal projects, which can be further focused on revenue generation, right? Well, what's I promised that I wouldn't go into DB sales mode, right? So I tried to stay away from it a little bit, right? But aside from doing the first approach, for example, we have a platform where companies can invest into money market funds, and therefore, although you might be banking with a single bank, you would be able to diversify the liquidity that you have within, what is considered to be a safer alternative, and have the funds readily available within money market deposits, and therefore pull on demand when it's necessary. And this is where we're seeing the market go to now. Is still keeping either a core bank or a couple of core banks within their overall relationship, but not the initial reaction when Silicon Valley Bank took hold of the market. And then, sorry. Now, I was just going to go back to the first bucket, which is interest rate and FX management. So, rates have been going up across the world. FX has volatility overall has come down a bit, but volatility, let's say, historically has been pretty high, especially with some of the other political events that are happening around the world. So companies are now really taking a look into how to optimize the interest rates, and then also where it's necessary, how to best handle the FX management. And I think it's maybe best to think of this through as a simple example. So if we have a company who is in Germany, you might have operations internationally. So for example, you might have your development team that is sitting in Poland. So the environment in Germany and environment in Poland is different. You have different interest rate factors. In Poland, it's higher, and you also have different FX component there as well. So what can you do? You have some of your expenses in Poland. You might be generating income either solely in Europe and European currency, or you might have international components as well. And therefore, when you think of this revenue to cost swing, you can choose to trade spot, which is to convert to zloty, send it to Poland, have it housed there, and have it used as expenses. Or you can look into a forward market where you would be essentially planning those deposits into the future, but that gives you the benefit of utilizing that liquidity as opposed to having it sitting in Poland altogether. So we're starting to see companies really tightening the screws a bit when it comes to this operational efficiency and ensuring that these cash flows can be really, really well planned and optimized in the given environments that they're working in.
Absolutely. To be honest, I see this on my day-to-day at work, so it's really a current topic. I mean, crazy enough, we're actually coming to the last question for today. This went by so quickly. We can do this again. But okay, so as a last one to you, Milos, how do you think companies can prepare? I mean, like the markets will be coming back, and as you said, like capital is coming back, so funding will increase again. And I mean, you mentioned already a few tips here and there about about cash management, about liquidity management, but any tricks and tips on how to manage this incoming funding that they might have?
Yeah, absolutely. And once funding is secured from York and it's coming into planning, no, just kidding. So there's really, let's say again, three main stages. The first stage is hunting for capital. The second stage is capital is committed. And the third stage is capital is in the door now, right? It's been injected into the company. So from the perspective of hunting for capital, it's completely understandable that, and I'm sure you know this from an investor relations perspective, it's a lot of due diligence, data gathering, pitch building, hunting for the right partners. But once those partners have been filtered down to a few core partners, you can then also explore into any type of venture debt or working capital components to it, because they can be closely linked together, so that an equity round can also be accompanied with, as mentioned, either venture debt or some type of working capital facility. This, of course, takes a little bit of time. So preparing for that, having it in mind and exploring that with your financial service provider could also enhance the overall profile for the company and give a little bit more room and space to grow as that money's coming in. On the second side is once that commitment is secured and you know which players you're going with, you know that the funding is coming in due time, then the simple yet key questions would be, well, what currency is this in? And I think this is the question that is sometimes oversimplified, because just because a company is sitting in Germany, for example, doesn't mean that euro is going to be their functional currency in the end. If most of their investors are international, and if most of their sales or operations are also international, that key question needs to be considered on what do I need to do with this? Will we be converting it to another currency and keeping the balances there and thereby managing the risks from this perspective, or will everything be in euro and therefore simplify? This is something that can be planned quite easily, actually. And the next part is rather administrative. So I think the last thing before the capital injection comes in is, anybody wants to face is some type of friction into the account, right? So it means that your cap table will change. It means that maybe different people will need access to your bank accounts, and all of these, let's say, administrative processes should also be considered as an investor is coming in. And then the last part, capital is now in the door, and now we start focusing on interest rate optimization. Again, coming back to counterparty management, FX distribution, and then automation of cash management and cash management solutions to make sure that, again, your resources can be deployed not on administrative topics, but on revenue generating topics and risk management solutions, and thereby really giving you that full ability to squeeze as much out of the capital that's come in and optimize it and ensure that the growth continues on as long as possible.
No, this is honestly great. Thank you, Milos, for sharing all this information. As you say, we always like to give actionable advice to the audience. I think we really made it this time. Thank you again to you both for joining us today, and for joining Street Tweets, and look forward to having you again and seeing you at the next event potentially.
Thank you, Caroline. Appreciate it.
We'll be there.
So, wir sind jetzt auch schon wieder am Ende des Podcasts angekommen. Ich hoffe, dir hat diese Episode gefallen. Wenn du Hilfe brauchst bei irgendwelchen Kapitalmarktthemen oder digitalen Investor Relations Themen, dann melde dich gerne unter unicornconsulting.com und buch dir einen ersten freien Consulting Call. Wir würden uns ebenfalls darüber freuen, wenn du uns auf Social Media folgst, zum Beispiel YouTube, TikTok, Instagram oder auch LinkedIn, oder wenn du einfach einen Like da lässt. Ich wünsche euch alles Gute und bis zum nächsten Mal. Eure Julia. Ciao.